The government shutdown is now 3 weeks long with no signs of an end in sight. We've got more evidence of an economic slowdown in China. Ron, obviously we are business-focused investors, but how should we be feeling about the big macro stuff these days?
You know, this furlough, it's a human story, but there are real economic implications here. Just the paychecks that are being foregone right now represent a loss of more than $2.2 billion in consumer spending. So you had housing, transportation, food, healthcare, all getting hit, and that will reverberate through the economy for sure.
Andy, we're seeing more and more CEOs come out, maybe not as strongly as Fred Smith at FedEx did a couple of weeks back, but more and more CEOs coming out and talking about their ability to plan in 2019 is getting harder and harder.
Yeah, I think it has to. When you start thinking about a government shutdown, the trade issues continue to be forefront for so many of the global companies, wondering what is going to happen with the trade issues. So this uncertainty, CEOs and chief financial officers don't like planning because it's so difficult to do when they don't know what's going to happen over the next few months. So when you start thinking about where interest rates are going to go and all these uncertainties for them, they start saying, hey, listen, we can't plan as aggressively as we would like to.
The largest uncertainty to me is less in the U.S. and more just what's going on with China and the slowdown there. I mean, we saw Apple a week ago lower its guidance, and that was a pretty big deal. But I think there's a chance that that might just be the first step of many. I mean, if you think about Nike, Starbucks, Tesla, like all of these big consumer branded companies that also operate in China, they could get hit, especially if a lot of those companies' growth stories are dependent on China in some way. And I don't think the news about GDP growth rates or any of that really is the biggest existential deal. But when you pair on like trade tensions and even thinking about a story this morning in which another Huawei executive in Poland was detained, I can totally see how those pressures could escalate and how at some point China could retaliate even harder on companies operating in China.
You know, and we also got some consumer price information this morning that shows inflation is not necessarily something to worry about right now, which may give the Fed some leeway here if they want to kind of pull back on the tightening and let the economy go a little further, which of course Trump and others would love to see, and the pressure on the Fed chief is pretty significant.
Well, and to go back to one of the companies that you mentioned, Aaron, you look at Starbucks. On Friday, Goldman Sachs comes out with a downgrade of Starbucks, but it's basically tied to an economic slowdown in China. And it really does seem like a time for investors to look at the stocks in their portfolio and ask the question, okay, how much exposure do we have in China here? Because for the longest time, China has been the great opportunity for so many businesses. Now it seems like the risk factor is a little higher, Andy. Yeah,
I think so, Chris. If you can look into your portfolio and look at the global exposure you have at the individual level to those companies, and just make sure you understand what that exposure is to your portfolio. I think long-term, China continues to be such a massive economy and such a massive population that for so many consumer branding companies like the ones Aaron mentioned, it's still an attractive market. But there's certainly these trade tensions and some of the macro slowdowns will impact that in the short term.
And on a macro level, China is so difficult to figure out because they're notorious for kind of playing with the numbers. So it's really hard to understand until you actually see someone like an Apple kind of slowing their sales or purchases from suppliers. So sometimes we have to play catch up rather than being able to look at the macro data.